Another chaotic week, with the tariff issues spinning into farce even as long-term bond yields claw higher and friction with China and the US continues. Sentiments were initially buoyed at the start of the week by signs of easing trade tensions between the US and Europe after President Donald Trump delayed planned tariffs on imports from the EU. Investor focus then shifted to earnings of AI chipmaker Nvidia, which reported better than expected results in the middle of the week. Nvidia's strong results on Wednesday closed out a solid earnings season for big tech and the broader AI theme, which remains a key pillar of this bull market, Barclays said. But shares slid back on Friday as US equities swung from positive to negative and then back to flat amid the uncertainty. The pause did little to dent a stellar month, though, for the S&P 500, rising more than 6%. That's its best May since 1990. And the Nasdaq advanced more than 9%, its biggest monthly percentage gain since November 2023. The MSCI Global Index was flat for the day, but up 3.56% for the month, and the Stoxx 600 in Europe was up 2.28% across May, while the ASX 200 in Australia rose 2.39%. The volatility index was down almost 17% across the week, which may suggest pain is easing, but not so fast. President Donald Trump's trade war just cost companies more than $34 billion in lost sales and higher costs. That's according to a Reuters analysis of corporate disclosures, a toll which is expected to rise as ongoing uncertainty over tariff paralyzed decision-making at some of the world's largest companies. The Aussie was at 64.32 US cents and 47.83 UK pence. Finally, in crypto, Bitcoin, having achieved a high of around 110,000 US on May the 26th, has slid back again to around 103,000, caught up in the general air of uncertainty. While inflation seems to be tracking in line with the Fed's expectation, the wild trade-related uncertainty can't be overlooked. Potential impacts are far-ranging and unpredictable, so we should expect continued swings in sentiment and volatility.